নমস্কাৰ আজি কথন অনুষ্ঠানলৈ আপোনালোকক আদৰণি জনাইছোঁ। আজি আমাৰ অনুষ্ঠানৰ অতিথি জেএনইউৰ প্ৰাক্তন অধ্যাপক, তেওঁ ইকনমিক এণ্ড প্লেনিং ষ্টাডিজৰ অধ্যাপক আছিলে আৰু এতিয়া সম্প্ৰতি তেওঁ মেছাচুচেটছ ইউনিভাৰ্চিটিৰ তেওঁ ছিনিয়ৰ ৰিচাৰ্চ ফেল'। গতিকে তেখেতৰ লগত আমি এই যে আদানীৰ যিটো সংকট, সি আমাৰ ভাৰতৰ অৰ্থনীতিৰ ওপৰত তাৰ কি প্ৰভাৱ পৰিব পাৰে এই কথাটো আলোচনা কৰিম। মই আশা কৰোঁ যে আপোনালোকে এই আলোচনাটোৰ দ্বাৰা আপোনালোক আমাৰ সাধাৰণ দৰ্শকসকল ইয়াৰ দ্বাৰা উপকৃত হ'ব। আপোনালোকক আলোচনাটিলে আমি আদৰণি জনাইছোঁ পুনৰবাৰ। Hello, welcome to a special interview of Cotton. We have a very eminent guest today, and is Professor C.P. Chandrasekhar, who is a professor in Economic and Planning Center of Economic and Planning, and presently he is a senior fellow, research fellow in the Massachusetts University. So I welcome you to my show here today, and we are really glad that you have spared time to talk with us. Now, first thing I would like to know is that, okay, this meteoric rise of Adani. Now, and when we are talking, you and me, we are talking, what is the, as he rose to a very height, now, where is he at the moment today? What is the fall of his nature?
Well, first, what explains the meteoric rise? I suppose there's a complex of factors there. But we do know that certain things were crucial. First, of course, is that using the fact that in a period of, when we have economic policy dominated by neoliberal ideas, that the state is supposed to facilitate the private sector. We have seen over a period of time a situation in which the state has not generally been facilitating the private sector as a whole, but has been targetedly facilitating particular private entrepreneurs because of their closeness to the state. So we've had instances of this in the past, but this is one very sort of strong case of or example of where there is a nexus between the state and individual segments of big business in India. Okay, and this is particularly stark and startling because that nexus has helped somebody who was nowhere in the league of big business groups in India, and really emerged in the period over the last 2 decades or so, rise to the top, not merely rise to the top within India, but rise to the top in terms of market capitalization among global players. So that's the first thing, that the closeness to the state and the willingness of the state to accommodate these interests by shifting policy, by providing special concessions, access to land, whatever it may be, you have that intense. The second thing I think which explains the meteoric rise is that in the wake of financial liberalization, and given a tendency towards regulatory forbearance, where the regulators, whether it's the SEBI, the central bank, the Reserve Bank of India, etc., that they exercise a degree of forbearance. They don't actually come down when there is a suspicion, because there have been people, including international media groups like Bloomberg, etc., which had pointed out that, listen, there is something odd about this meteoric rise, as you call it, of this business group and this one individual. And therefore, it was not that there were no signals, that this is something which had to be, this is a case in which the regulators had to scrutinize. But you actually had a situation where the sort of ethos or the ambience of regulatory forbearance had resulted in a situation where the state could call upon these entities to actually hold back, rather than on the basis of these signals which were coming from the market and elsewhere, at least scrutinize before penalizing or undertaking with significant investigations, at least to scrutinize. And the third thing is that given that environment, we actually see that what we have here is a very unusual situation in which utilizing related companies, including many of which are located abroad in sort of tax havens or quasi tax havens, Mauritius and elsewhere. You have linked companies buying into the equity of a company in which the free floating shares, that is, the shares actually available for trading in the market, are relatively small, buying up these shares in order to be able to inflate the prices of these shares so that you could use the inflated values as the basis to provide collateral to financial institutions, both domestic and international, to borrow large sums of money and undertake investments in multiple infrastructural areas, which normally a sort of fledgling entrepreneurial group would think twice about entering, because you actually will have to risk large amounts of own capital in each individual project. But we saw that this was a group which actually did it in multiple projects and did it on the basis of borrowing from public sector banks, from private financial institutions, as I said, both domestic and global. Put all of this together, and that provides the basis, the explanation for this meteoric rise. But obviously, even if not the regulators, somebody decided that they can benefit from actually investigating a set of companies or a business group, which should have been to a certain extent scrutinized by our own regulators, and decided, that is Hindenburg, decided to short these shares based on its investigation. That is the revenue model of Hindenburg. I mean, it's not a disinterested party. But basically, what it does is it investigates entities which it thinks are operating on the basis of, well, as it claims, allegedly, of course, the Adanis have denied it, that fraudulently manipulated share prices resulted in an inflation to the tune of about 85%, is what they had said in their report. And they do these kinds of investigations, and then in the process decide to actually short these shares, which means acquire these shares without owning them, to sell at the current high prices with the hope that they would be able to buy cheap subsequently when the inflated prices of these shares collapse, and they get it to collapse by releasing their research into the public domain. That's their business model. But we needed a private player, a short seller, to actually reveal something which should have been revealed and addressed quite early by our own regulators.
But is it not a very sad, actually, reflection on our regulatory agencies
Of
that
course it is. Of course, it is a sad reflection on our regulatory agencies. It's also a sad reflection on our domestic financial institutions, on publicly owned banks like the State Bank and others, and the Life Insurance Corporation, which are actually bought into the equity to a certain extent and lent large sums of money, have significant exposures. Now you can say that relative to the size of the LIC, because the LIC is true, is a big behemoth. It's a
yeah,
nationalized behemoth.
I'll come to that. I'll come
Uh,
to that.
yeah.
Now, here
So
is
yeah. So it is a failure of it is bad. It's a failure both of our regulatory institutions and our public financial institutions.
institution, and we also can say that okay, it is also the failure about government, because they are managed by the government.
Well, I would say that I don't know whether failure is the right term there, because if you say that the idea of the government, at least sections of the government, was to actually promote this company, of course, presenting it as promoting our national champions, as it were. But if the idea was to actually promote this, your failure was not that you promoted this company, because that was your intention. Your failure was that you promoted it in a way in which it could not be sustained because of the operations of Hindenburg. That is the
Yeah.
failure.
Now, interesting. Now, I have your article on in Hindu. So, and there you have made certain very interesting observations, and you have already mentioned a little bit, but then I would like you to explain it in a little elaborately. Uh, in the light of the new liberal policy, how do we see the rise of Adani, and some other companies, particularly Adani, in the light of the new liberal policy actually followed by the government.
We have to, of course, that was a short article, but if I may, take a minute here, we must recognize that once after round about the late 1960s, it became clear that the regime of intervention, which had been put in place in the 1950s and later, had not managed to deliver on its promises. And this was something, its promises to curtail monopoly, its promises to reduce inequality quite significantly, both asset and income inequality. And this was not something which came out only out of the sort of statements or analysis of critiques of the government, of the then government, of the Congress governments of that period. It actually came from many reports of the Planning Commission, the Mahalanobis Committee on Levels of Living, the Dutt Committee report and the Industrial Licensing Policy Inquiry Committee report, Monopolies Inquiry Commission report. So government-appointed commissions had begun to establish that, listen, while there was this interventionist regime involving, licensing, controls on prices, controls on, on capacity creation, on imports, and so on and so forth. And part of this, besides promoting growth, the intention was to actually ensure that this growth was actually something which will be more inclusive, that it will not actually result in the strengthening of the traditional business groups. That once that became clear that this interventionist strategy had not delivered on those promises, it lost its legitimacy. Okay. And when it lost its legitimacy and it did not actually deliver on many things, many of its objectives, then actually, it actually began to be implemented in a very arbitrary fashion, because even the government no more believed that it could use these instruments, or it was using, not that it could of course, but it was using these instruments to achieve these objectives, that other forces were playing too strong a role, and the government was not able to stand up to them. And when intervention lost its legitimacy, we actually had a set of people who tried to sort of sidestep or subvert this intervention in order to do what? In order to break down the control which then top 10, top 20, top 75 business groups had over the Indian business sector, with Tata and Birla at the top, etc. One group which did this was, of course, the Reliance group of Dhirubhai Ambani, where they were able to actually obtain licenses. They were able to obtain licenses of capacities which were very large in the synthetic fiber and petrochemical sector. There are allegations that they were able to influence policy with regard to imports, tariffs, etc., which favored them. And they could actually either sidestep or subvert or appropriate, capture the regulatory apparatus for themselves. Okay. Now, in all of this, one of the arguments which was made is that, listen, if this is the problem with regulation, if we do away with regulation, then, there would be competition, there would be transparency, there won't be a set of babus or bureaucrats or whatever you want to call them, who, on the basis of their whim and fancy or for whatever other reason, give special favors and so on. All that will come to an end, because neoliberalism, which basically means the operation of the market and its competitive thrust, would result in a situation where no more would this be true, because you wouldn't have the benefit of giving these favors to the private sector using state control and state intervention. Now, what is becoming clear in this instance and other instances too, is that the coming of liberalization, deregulation, decontrol, delicensing, etc., does not mean that the state is not in a position to be able to favor particular sections of the private sector. It is just that the nature of state support changes, the way in which the state actually favors. So there is no transparency still. We did not know all this was happening. There is no transparency. There is obviously a way in which somebody has got disproportionate benefits out of a given development agenda. It is becoming clear that, you might say that public ownership of banks is a good thing. I believe it's a very good thing, but it can be misused. If the state on top, in pursuit of whatever be its agenda, including its neoliberal agenda, decides to use the public sector financial institutions to further goals in terms of promoting certain interests. So the state actually, It is not that state intervention disappears with neoliberalism. It's just that the nature of intervention changes. And it can actually, because you can say that if my role now is to facilitate the private sector, there is a very thin line. When am I facilitating the private sector to incentivize private savings and investment? And when am I facilitating a particular private sector player because of the fact that there is that kind of cronyism? Yeah. Sorry?
One particular group.
Yeah,
now,
that's right.
Yeah. That is actually, that is a different kind of intervention. That is a different kind of patronage.
Yes,
that means you will patronize someone who would like to patronize, who can, you may maybe, we do not want to go to the issue of election bond and things like that, but then one can read so many things into that, isn't it? And even when Mahua Moitra and Rahul Gandhi raised these issues in the parliament, and there is no discussion on it.
Yeah, no, it was not even no discussion. It was many of those questions were removed from the record.
but people have heard about it. People have come to know about. People have seen it. Now, in your article, you made, actually, I just want you to explain it a little bit elaborately again. In your article, you raise the first is that the gravity-defying climb in market value of the listed companies was accompanied by an expansion of the physical assets and etc. etc. That gravity-defying thing, market value, that is one. Another thing, you have made a very interesting comment. I've said that that was towards the end of this pair, that here you mentioned that his genius seemed to lie in the ability to mobilize the resources required for this near impossible task. These two things.
Yeah.
I would request you to explain a little more.
Yeah, let me start with the second first. What I was saying there is that, as I just mentioned to you, fledgling business groups or business groups which are just beginning to establish themselves normally would think twice before investing in the infrastructural area. Why? Because infrastructure requires, each project requires a large amount of money. And at any debt equity ratio, it means that you have to risk a lot of your own money in one or two projects because it requires a lot of own money. Of course, you borrow as well, but your own capital is there. So that if that fails, then you fail because your money is locked up in one or two projects. Now, an interesting thing about the Adani case is, firstly, not only is a lot of the investment in very, very capital intensive projects. I mean, starting from, of course, Mudra Port, the special economic zone, airports, civil, airports, energy, power generation, coal mines, and so on and so forth. These are all, capital intensive infrastructure. So the question arises, I mean, so you're basically saying that you're going to take a risk because you're taking a risk because these would be areas in which even it might be that the government might say that, listen, I want to control prices because I want people to have, I want farmers to get electricity cheap. So I'm not going to let you charge very high prices for your electricity to the state electricity boards or whatever it may be. So there is that risk as well, that you're entering areas in which the state might actually say, based on historical experience, if you look at it, that, listen, I'm going to put some kind of an implicit or explicit cap on the prices you can charge, which means your profitability could be affected. You could actually... It will affect your profit. Yeah. And, if your coal prices suddenly go up, you wouldn't be able to immediately adjust, etc. So it's interesting that this group undertakes large amounts of investment in these areas, which raises two questions. One question it raises is, how was it expecting to mobilize that kind of money, given the fact that it was a fledgling group? Because if you're rapidly growing in areas of this kind, your investment is growing at a much faster rate than your profits. So you must be constantly getting money from outside. Okay. So the thing was, how are you going to mobilize money? Now, what we know is that the way in which this money was mobilized was the ability to use a very high share price to actually pledge shares as collateral And having pledged shares as collateral, you could borrow money. So if let us say shares worth 5,000 crores are in the market selling at, let us say, or supposedly selling, because there's not much trading happening, because most of the shares were controlled by related companies and the promoters. But let us say it's your 5,000 crores is trading at 30 or 35,000 crores. Now you can use a small chunk of these shares to actually get loans by saying that, listen, here's my shares. This is the market value over the last 6 months or last 3 months or whatever it is. Take this as my collateral and give me loan, which is what they did. So which basically meant that they didn't put too much of new money in terms of equity, but they could actually obtain significant amount of borrowing. So the debt equity ratio of many of these firms was very high. But the reason they could get that debt was because of the collateral they were offering. And the
Can you say that it was outright fraud?
Well, the fraud does not lie in the fact that you're using this as collateral. The fraud lay in the fact that how did these prices become so high? The gravity-defying increase in price. That Hindenburg alleges, even though Adani is denied, that Hindenburg alleges is because of the manipulation, the fraudulent manipulation of the stock prices by actually getting related companies to constantly buy these shares and keep pushing up the prices. So you have one buying, selling to another. There's all sorts of these transactions going on among companies which are in some sense related to the group. Even though they are claiming that it's not related to the group, but Hindenburg claims that it's related to the group. But we do know that pushed up share prices massively. Now, Hindenburg's calculation is, of course, that there was an 85 or something percent
85 or so. And
overvaluation, and already we know that 60% plus.
Interesting that it fall is also almost 75 or 80%.
Yeah. So the point is, now one aspect of this is, therefore, what you're really saying is that a large part of the shares is actually owned by the promoters and related companies, not by others. So how come the share, they are not selling? How come the share price is falling so much? The reason it is falling is because there is only so little number of shares in the market, which is determining the price. And all the people who hold this small proportion of shares want to sell. So there is no counterparty. There's nobody else to buy, because already these people control so much that now they're under scrutiny. So they already, not Hindenburg. I mean, there are other financial companies which have said that they are violating the SEBI's norm, that if you're a listed company, 25% of your shares must be in public hands. And they are saying 25% is not in public hands. So if you have all those who are holding the free-floating shares, the tradable shares, say that they want to sell and there's no buyer, then obviously the price will collapse, which is what is happening.
So they are in a really, really bad crisis.
Yes, Adani? I would, because the point is, the mystery is the following. Because if what I'm saying is correct, and it's not that I've done a great investigative journalist job and so on. This is based on the information.
No, but then everything is there in the public
domain. It's coming into the public domain, not just from Hindenburg, but after Hindenburg, by by different international financial.
The other day I interviewed Paranjit Guhathakurata. So he also wrote these things long time back.
Yeah. So basically, the thing is that if the share price starts collapsing, and which means the value of the collateral which had been pledged to borrow money is actually collapsing, then the banks or the financial institutions which lend against this collateral will call upon the borrower to give additional collateral. There'll be margin calls that, listen, you better put more money, because now what you told me was 35,000 crores is only 8,000 crores or 10,000 crores. So please, because your collateral is not. So you would have expected a huge amount of margin calls, which would push the firm into bankruptcy. Okay. Now, the thing is, it hasn't happened. In fact, we know of cases, at least it's not being reported, but we know of cases where some loans which were falling due, or some in which they were expecting margin calls, they went and paid back the loans, 2 or 3 small bunches of loans. So there is something which needs to be looked at. Is it that some lenders, maybe public sector lenders, I don't know who, are not making margin calls, are not demanding that you beef up the collateral because the price value of the collateral that you gave us now is 2/3 of what what it was when you actually gave us that as collateral. This is not clear as yet. So I don't want to. I don't want to say something which I haven't investigated.
I know.
But there is this mystery.
Needs to be. But this needs to be investigated.
Yeah.
This
absolutely.
needs to be investigated. Now, one thing after this, because now I would like to know from you. So there was a meteoric rise, extraordinary rise of Adani, and there is an extraordinary fall. Now, how is it going to actually affect our economy, Indian economy? What would be its actually effect on our economy? How do you see it? Because already many people are apprehensive because the LSE's money is there, then State Bank's money is there. So actually, when I fixed this interview with you, many people wanted, they are really scared because their money is stuck in LIC, in State Bank of India, and they are really scared. They are apprehensive. Now, how is it going to actually turn out, and what is going to happen to their money?
Well, there are many things here. First, of course, you see, as you know, that the banks, the State Bank of India, the LIC, and so on, are saying that relative to our asset position, this is. I mean, our exposure does not violate any rules about how much we can hold in a single borrowing entity or a single group which borrows from us. We haven't given them so much relative to our assets. And because it's a small proportion of assets, we actually are not, there's no danger that this loss is not going to undermine us. Firstly, that's not clear. We'll have to wait and see whether it's not going to have some effect on their ability to be able to sustain their activities in terms of credit provision and so on, which can have some effect on the economy if credit provision slows down. But the second thing is, I mean, the question arises, if this is a way in which you can function, by you, I mean, on the one hand, the Adani Group, on the other hand, the lenders in the form of State Bank, LIC, etc., etc. If this is the way you can function, then is it only Adani who benefited from this? I mean, it's possible that Adani has been investigated because of Hindenburg. Possibly there are other players. Because we know when the non-performing assets of the banking system became public after 2015, when you had a new set of rules to recognize bad debt, within a period of 2 years, bad debt on the banking system's book just shot up. And it was not one group. There were multiple groups. There was Kingfisher, there was Jet, there was, Lanco.
So many.
There were so many different groups which had borrowed huge amounts of money, which had gone bad. So the point
is, they are our money, your money, my money.
Yeah. So the point is, if information starts coming out, I'm not saying that it's true, but if it is true and information starts coming out that there are other groups which also operated perhaps in this fashion, even if not maybe to the same degree, but that there was some kind of use of the stock market and hype, because we went through a period, valuations in the stock market was going up hugely. I mean, from something like, whatever, maybe 30,000 crore, 30,000 or 30, 35, it went up to 60,000, the Sensex. So valuations in the market were going up. So maybe other people also went down this route, that inflated valuations were used to actually provide collateral and to borrow money. And now there might be an effect on the market post this, which reduces their valuations, which affects, therefore, their collateral values, which then sets up margin calls, which affects their functioning. So basically, if information of that, if this is true, I'm not saying it is true, but if it is true, it is possible. Why should it be only one group? But if that is true and information starts coming out, it will lead to a breakdown of trust of people like you and me in the institutions in which people hold their savings, So if that trust breaks down, then it will affect the viability of these institutions, because trust is crucial in the financial system. So yeah, it can. So it's not only that there can be some effect on credit provision and growth, etc. There could also be effects on the sort of, well, I wouldn't, at least it can induce fragility into the financial system. That's a possibility. I'm not saying it's going to happen, but it's a possibility.
Now, a general question. See, the government is saying that, okay, we are a robust economy because we are getting foreign funds. Our stock market is going fine. But now, in a fine morning, as it has happened in case of Adani, in a fine morning, you have actually earlier you have hinted at that, but I would want you to be more specific on this. In a fine morning, we find that, okay, the stock market has crashed, and now all our money, say LIC, PF, and all those things are now market. It is connected to the market. Now, and there's a capital actually going from our country to various other places. Now, what happens? Now, what happens to our economy? They are saying that, okay, we are a robust economy, though our unemployment situation, we know what is happening to our unemployment situation, what is happening to our poverty, actually inequality. Now, how do you actually explain these things?
Let me, I think it is quite crucial. It is quite crucial that we have to take two things into account. First, and we have to see the significance of the large inflow of foreign capital which came into India, particularly after 2004. Okay, large inflows, including into the stock market, bond market, etc.
You mentioned it in your article also.
Yeah. So the point is that the robust growth that you talk of is a robust growth which actually rode on credit. You gave money to people to buy houses. You gave money to people to buy cars, to buy automobiles. It's so easy to get credit. Okay. You also gave money to people who were setting up capacities to meet this demand. So you gave money, to corporations to invest in, to real estate developers, to all sorts of people. So you actually had a situation where there was this credit bubble, which was reflected in the fact that if you take the period before 2004 through the 1990s, the ratio of the total amount of outstanding commercial bank credit to the GDP, which is the size of the economy, was about 20 to 22%. By the time we moved from 2004 to 2012, that 20% became something like 55%. So there was this huge increase in credit, because that was also the period when we were having 8% growth. So the GDP is growing, but the credit outstanding is growing so much faster that the ratio moves from 20% to 55%. So that is what gave us this so-called robust growth. Now, why was this credit expansion possible? Because of the huge liquidity which came into the economy by virtue of foreign investors deciding that India is a good bet. You go and invest in Indian stock. You go and invest in India stock and equity and bond markets, and you're going to make a lot of money. Okay. Now, if it so happens that the sort of suspicion that there are manipulators operating in this market, and therefore the market can at any point of time, can actually see a downturn which is quite significant and sharp. If that possibility is there, and if there is a possibility that, if there is a feeling that there is a lack of transparency here, in which the government of this country is promoting its own national champions, if you want to call them that, then foreign investors are whimsical. They can say that, oh, let us go somewhere else. Let us go to Thailand. Let us go to, Indonesia or Malaysia or Brazil or Peru or Chile or wherever, they can go. The world is their play, the arena. So if there is an significant exit of foreign capital, of which there are some signs already because of the interest rate increases in the United States, if that accelerates because of all this, then you're going to see a certain degree of a liquidity squeeze in the system. You cannot anymore sustain that kind of credit. If you cannot sustain that kind of credit, you cannot sustain that kind of demand. If you cannot sustain that kind of credit, you cannot sustain that kind of investment. And therefore, you can start seeing an unraveling of this whole growth process. So this whole thing rides on a credit bubble, and the credit bubble rides on foreign investor interest in the Indian economy. If the foreign investor interest wanes, for either some other reasons or for reasons like all of this uncertainty, which is created by incidents like the Adani share price collapse, then we can see an unraveling of this robust growth. This robust growth will not be seen as robust.
It will be flat. It will be flat. Now, as you mentioned very clearly that, okay, now our money, you see, ordinary people's money is in State Bank. Ordinary people's money is in LIC, and it is very solid. It is very solid because this money, even if I withdraw some amount, some other people will be there. So it is a very solid. It is on a very solid base. But then credit bubble, it's an you see, it is okay. They see some possibility of quick profit. They come here, and when that vanishes, that is no longer exists here, and they run away. And then in the process, what happens? Our economy suffers.
Yeah. No, 1997, the so-called miracle countries, South Korea, Thailand, Malaysia, Indonesia, suddenly saw an exit of foreign capital. And we had the 1997 Southeast Asian financial crisis, and they were the strongest economies outside of the advanced nations. So it can happen to anyone, and it can happen to us.
So the last question I want to, and I want to end the interview here. The thing is that, okay, as an ordinary citizen, now actually what do we learn from the whole affair, whole thing? Because Adani invested so much and in so many sectors. Now, how is it going to affect us? That you have already explained. Now, what do we learn from this?
I suppose normally, how do you function? You function on the belief that the state and state agencies, like the regulators, like the Securities and Exchange Board, the Reserve Bank of India, the Insurance Regulatory and Development Authority, that regulatory agencies of this kind would actually take care of your money for you. That it would actually ensure that there would be a certain degree of stability in the financial system, so that there is no significant risk, either in terms of your being able to get your interest or returns, or in terms of your capital being safe. And you leave this to these agencies and to the state. Now, in some sense, we know that the history of capitalism has been such that there have been periods when it is clear that the state need not always be, and its agencies need not always be looking after the interests of its citizens and their savings. And therefore, it becomes important for us to realize that there is a necessity for civic engagement in actually monitoring the functioning of the financial system and the regulators. Because there is this question, who is going to monitor the monitor? Because if you say the SEBI is the monitor, who is going to be the monitor? Then you say it is the state. But if you say, okay, but who's going to monitor the state? And you say, oh, it is Parliament. But if Parliament is not be able to function properly, so you're basically saying that there is civic engagement which is necessary. Now, the problem with when we say that is, of course, that one way in which civic engagement occurs, of course, is through Parliament, which we have. But there, you can have situations when the majorities in Parliament are such that you cannot have a reasoned debate. The other is the media. And if it so happens that the media, accepting for some, as you mentioned, Karanjoy Goa, Takurta, or there are some particular portals or newspapers or whatever it is. But generally, the media has stopped playing its watchdog role, particularly when it comes to economic and financial matters. That's because of the fact that there is capture of the media by corporate groups, the big media at least. Okay, so we need to think about that how do we actually ensure that there can be a degree of civic engagement in monitoring the monitors, in given the possibility even if that is not routine, given the possibility that even in a world of so-called liberalization and so on, you can actually have nexus, kind of nexus which operates. And, this is important because, for example, I mean, Adani claimed that an attack on Adani is an attack on the nation, implicitly, if not explicitly. So you're basically saying that you can't question. Now, you can say that it's one thing to say that, okay, you can't question, because you're not educated. But then supposing I want educated people to be able to question, but then they must have the freedom to be able to do it. It mustn't be a situation in which you're told, no, you're doing this. It's not in the interest of the nation, that you're becoming the victim of some international force or whatever it may be. So I do think that there is a larger battle here. That is, we need to politically restore the ability for the citizen to actually, protect citizenship and use the rights of the citizen to be able to monitor in the interests of the citizenry at large, even economic institutions and financial institutions. And if we are in a world in which, let's say, the parliament alone is not able to do it, the media is in large measure not taking up the responsibility, then we'll have to think of ways in which we can actually establish that control, even if it is for the purely selfish reason that you don't want your wealth to wither away. The little wealth you have, your little savings you have, you don't want it to wither away. Even for that simple selfish reason, besides, of course, the other important reasons why we need to, build and sustain democracy, we actually need to think of ways in which we can have a degree of civic participation in the management of all affairs, including economic and financial affairs.
Actually, these words of you, these ending words of you, are so touching because, in the name of liberation, they say that okay, everything is open, and that very structure, that very state, is actually gagging people. They're gagging people. They are not allowing people to speak out, and in the process, we are not able to actually assert and question. There's a very sad state of affairs we are in now today. They gag newspaper, they gag media. The other day, the BBC documentary, such thing. Unfortunately, is because they say that Paranjit Guha Thakurata, he cannot speak
Yeah.
on Adani affairs. And only because thanks to Hindenburg, now all of us have come to know about it. Otherwise, even they would have tried to control that also.
Yeah.
So you have said something very important, that our civic engagement is a must, and that is the only way to save not only our free speech but also our little wealth we have, which we have actually put in such institutions. So thank you very much for your time. We are really grateful to you, and it was quite enlightening. Thank you very much.
Thank you very much. Thank you for having